with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Monday, July 19, 2021. I'm Carol Masser, my co-host Tim Stenovic. He's got a pretty cool gig for the next few days. He is down there in Texas on the ground getting ready for Blue Origin and Jeff Bezos' Tuesday trip to space. We'll have more from Tim in just a moment. But check out what's going on Wall Street. We're pretty much hovering near our lows of the session. We've got that summer sell-off, it almost feels like, that we've been talking about. Could this be it? We're going to talk about the reasons why. It has to do with those rising virus cases. Also worries over peak U.S. economic growth. So we're going to dig into that 10-year yield below 120 for the first time since February. So we're focused on the markets. We're going to be focused on the perks to hang on to Wall Street workers. So too on the crackdown threatening Chinese markets and on that hot story, literally, when it comes to IPOs. We've got a busy Monday all ahead. Let's get you going, though, on this Monday with a check on that trading day. Here is Charlie Pellet.
Thank you very much. Back to work. Monday, steep losses for the U.S. stock market. 10-year yield right now, 1.18%. We've got crude oil tumbling 7.6%. Barrel of WTI 66.36 a barrel. Crude is plunging 5.45%. Stocks slumping around the world as investors rush into haven assets after the Delta coronavirus variant cast a pall over the economic recovery. Tension between the U.S. and China escalates. S&P down now by 91, just about the low of the day, down 2.1%. The Dow down 924, down 2.7%. Nasdaq down 214, a drop of 1.5%. 10-year yield 1.18%. Gold is down 0.3%, 18.07 the ounce. West Texas Intermediate crude down 7.4%, 66.48 a barrel. After the bell, among the companies reporting quarterly results will be IBM. IBM shares down now by 1.75%. I'm Charlie Pellet. That, Carol, is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Let's get to the Market Drivers Report. And let's set the Business Week agenda on this Monday. There is a lot going on. It's interesting. Charlie mentioned those rising U.S.-China tensions. We're going to get into that in just a moment. Let's talk markets, though, with Dave Wilson, stocks editor at Bloomberg News, here in our Interactive Brokers studio. Vince Signorella, global macro strategist at Bloomberg News, on the phone from White Plains, New York. Dave, I want to set it off with you because you were just on TV, and I thought what you had to say about kind of putting this sell-off in perspective. It's not like everybody's throwing in the towel on everything. And gold, I got to tell you, it's actually down a little bit.
Kathy Wood's flagship ETF, ARK Innovation, is up today.
Thank you very
Higher
much.
by 0.3%. So, you know, it's kind of a strange day in a sense because it's really the bigger companies, the more established ones, leading the way down. And, you know, usually when you see declines this steep or this broad, it's like, you know, the smaller companies, the ones perceived as riskier, that take the biggest hits. It's not happening like that today. I mean, another bit of perspective about all this. The S&P 500 set a record a week ago.
Right.
It's down about
multiple records, right?
Yeah, that's the way it's been lately. It's down about 3% from that peak. We haven't had a 5% dip in the S&P 500 since last October.
Why is 5% significant?
Well, it's just sort of a reference point as much as anything for a magnitude of a decline.
But you've also watching the 50-day moving average. I heard you talk about that.
That's the other piece of it, yeah. But there, it's a matter of, you know, over the last several months, we've seen the S&P 500 pull back, in some cases go a bit below that 50-day moving average, an indicator of price trends, really. Got there today and then bounced right back up. So however you want to look at it, sure, it's a broad-based decline. All 11 of the main industry groups in the S&P 500 are lower. There are only 30 individual stocks in the index that aren't down at this point.
Right.
So it's broad-based, but it's not all that deep in terms of not only where we are today, but also where we've been historically.
And something like small caps, which have been beaten up big time, they're actually holding up better than the S&P and the Dow. So it gives you some perspective here.
Absolutely. The Russell 2000 off about 1.5% as we speak.
All right, good to get that perspective. I also always love getting Vince Signorella's perspective. You, though, have been, I feel like, a little bit more sanguine and a little bit more pessimistic about the market outlook here. How do you assess today's selling, Vince?
Well, I mean, I think we're just seeing the market reprice what's the next growth cycle coming, both in the third and into the fourth quarter. You know, we've talked many times about how the stimulus, the extra stimulus and unemployment and such, is going to end in a couple of months. And when we see that decline in income, if we still see higher inflation, we're going to see somewhat lower disposable income for the consumer.
Right.
And that spells for lower earnings. And so the numbers that we were seeing a week or so ago were probably just a little bit on the high side. And I think, as Dave mentioned, you know, as well, we're just seeing some paring back of certain things. Not everything's being thrown out.
Right, exactly.
We still are going to see a recovery going into the third and fourth quarters, just maybe not as gangbusters as folks had thought.
Would you go as far to say then the Fed is right in being really easy, lower for longer, because despite some of the gangbusters numbers that we're seeing in terms of growth, got to remember where they're coming from. And once we get back to kind of quote unquote more normal, we'll get to see that growth maybe isn't as strong as we thought.
Yeah, and I mean, the fixed income market is saying the Fed is right. I happen to think that they want to be caught behind the curve on this. They need to be caught behind the curve.
They've said that, right?
They can't anticipate what is happening. When they've done that in the past, it's been a major policy mistake, and they've lost credibility with markets. I think this time, Jay Powell's a pretty interesting guy. He knows markets. I think he's willing to let the market show him where rates should be, and I think that's what they're going to do. And that's probably what's lifting treasuries at the moment. However, I wouldn't get too far carried away. I think 1.2% is a little aggressive for a 10-year. When you're expecting the kind of growth that we should have at the end of this, and if persistent inflation continues, we're way too low on yields and way overbid, I think, in treasuries.
If ifs and buts were candy nuts, we'd all have fun at Christmas. I'm just going to say that. It's my favorite expression. Dave Wilson, come in, though. Where we will get some certainty is we've got some big earnings over the next couple of weeks. You set us up well. We've got IBM and some others after the close today.
Yeah, absolutely. PPG Industries, another one. J.B. Hunt, trucking company. So, you know, you're starting to get beyond finance in terms of the numbers that are coming out. And, you know, we'll have a broader look. I mean, Netflix tomorrow, for example. So, you know, there are plenty of reports to get through. I mean, things are kind of gearing up this week. Next week is when earnings really kind of hit front and center. But there's going to be enough in terms of, you know, second quarter performance and outlooks, you know, for investors to really start getting a sense of how companies are looking. And, you know, we've already seen a lot of examples with earnings and revenue beating estimates and the shares not going up. So, you know, that's certainly part of the mix as well.
Yeah, we're going to talk with Gina Martins for Beyond the Bell. She's part of the team over on the TV side, so we'll see what she has to say about earnings going forward. Coca-Cola, Twitter, Intel, Chipotle, United Airlines, American, USX, AT&T, and Verizon, they're all reporting, so we'll get a better clue here.
Yeah, absolutely. I mean, you've got a lot of numbers to get through. As much as next week is really front and center, this week, you know, we'll have enough to kind of shape a few company shares.
Then save you 20 seconds. What are you watching out for when these earnings come out? Just quickly.
Well, I mean, it's, you know, again, as David mentioned, we'll see where the larger companies show. That's been a lot of what's been thrown out with the bathwater today. I think, you know, you're going to see certain companies that can raise prices will be the ones that look forward to doing better than the ones that can't.
Good point. Hey, guys, thank you so much. Perfect setup on this Monday as we still have a couple hours left in the trading day. Dave Wilson, stocks editor at Bloomberg. He'll be back with his chart of the day. Vince Signorella, global macro strategist. Catch him on the Bloomberg at SQUA Go on your launch pad. Quick check on the Business Week Bite of the Day, one number that tells us a lot. Today's number is 512,000. In a follow-up to the interview we did last Friday with Martin Nolan of Julian's Auctions, LeBron James' St. Vincent St. Mary's High School jersey, which he wore for his iconic Sports Illustrated The Chosen One cover many years ago, sold for $512,000, set a new world record for the highest selling price for a high school jersey sold at auction. So really cool stuff there, and nice follow-up in terms of some of those items that went on sale over the weekend. All right, let's get you going, though, on world and national news. You're set up for markets. Find out what's going on in the world. Here's Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Well, the nation's top infectious disease expert, Anthony Fauci, says the Delta variant of the coronavirus is causing a significant increase in infections, and the Biden administration is practically pleading with people to get vaccinated. He tells Bloomberg the risk of infection is minimal, though, for those who've already received a shot.
Vaccinated people are generally protected from infection, not completely, because remember, the vaccine trials that showed the efficacy of the vaccines were based on the ability to prevent clinically apparent disease.
Fauci says if you have received the shot, you're unlikely to be hospitalized or to die from COVID. The administration today is warning Americans to avoid travel to the UK if possible because of a surge there of COVID-19. Pandemic restrictions have been lifted there even though cases are rising, and that means many UK workers are still staying home. We spoke with London Mayor Sadiq Khan about the situation.
What you're not going to see is people returning 5 days a week to the offices or place of work. What I suspect you will see is those who've not been in their office for maybe 16 months coming back, first for a day, then 2 days, and building confidence over the course of the next few weeks and months.
London Mayor Sadiq Khan says many employers will continue to limit the number of staff in the office. The Biden administration has transferred a detainee out of the Guantanamo Bay detention facility for the first time. It is a major shift in policy from the Trump presidency. Officials have sent a Moroccan man back home years after he was recommended for discharge. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. We're going to catch up with my co-host, Tim Stanovic. He's on the ground in Texas, ahead of Jeff Bezos' launch into space. We'll talk with him in a bit. Meantime, Charlie Pellet with me, going over some of the day's virus news. Nancy Lyons, of course, just running down some of it as well. Charlie, a couple things on our radar. New York City Mayor Bill de Blasio saying he has no plans to renew indoor mask mandates despite a spike in cases stemming from the Delta COVID-19 variant, and a move by LA, something Nance was talking about, to again require residents to wear masks. And so we're seeing cases go up here in New York City, I think jumping 1.69%. That's the positivity rate in New York City, 7-day average of COVID-19 positivity rate jumping to 1.69% on Saturday, more than double the percentage of residents who tested positive from the last month. So the number's still below that threshold that we all start to get nervous about, but it's the trend line and the doubling that we get nervous about,
Indeed,
Charlie.
and clearly troubling. We've got the health commissioner here in New York, Dave Chomsky, saying during that briefing today with Mayor de Blasio that the Delta variant now makes up 69% of cases sequenced. Mayor de Blasio was asked about the issue during that briefing. As for masks, saying, quote, the simple answer is no in terms of wearing masks indoors. He says masks have value unquestionably, but they're not going to the root of the problem. Vaccination is.
Yeah, exactly. Although I will say I'm seeing more and more people wearing masks again in and around the world, and especially inside offices. I'm seeing that again. Hey, the other story is what's going on in the UK. Boris Johnson's plan to get the UK back to normal at risk of being derailed amid a public outcry over his attempt to dodge pandemic isolation rules. I was reading this all over the weekend. COVID-19 cases, though, soaring the most in the world in the UK.
Indeed, that's the headline there. The other headline that caught my attention today, Carol, CDC here in the United States raising COVID warning to the highest level for travelers to the United Kingdom. So yes, on the one hand, so-called Freedom Day with the reopening in the United Kingdom. On the other hand, CDC saying highest level for U.S. travelers to the UK.
I feel like I've seen this movie before, Charlie. All right, you are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Treasury 10-year yields now at the lowest since February. The Dow, the S&P, NASDAQ, steep losses. Stocks are slumping around the world as investors rush into haven assets after the Delta coronavirus variant cast a pall over the economic recovery. Also, tension between the U.S. and China escalating. We've got the S&P down 84 now, down by 2%. The Dow down 867, down 2.5%. NASDAQ is down 182, lower by 1.3%. 10-year up 30 seconds. 10-year yield 1.18%. Gold down $4 the ounce, down 0.2% at 1807. Bitcoin down 3%, 30,717. West Texas Intermediate crude is plunging 7.5%, 66.33 a barrel. Airlines and cruise operators are tumbling amid concern over further travel restrictions. Carnival Corp, for instance, down 5.8%. Royal Caribbean among the cruise line names down 4.7%. Norwegian down 5.6%. Also among some of the airline stocks, UAL down 5.6%. American down 4.3%. Delta down 4.3% as well. Southwest down by 3.3%. And that's a Bloomberg Business Flash.
Yeah, tough to be in the travel industry on this Monday because of the market declines and worries over COVID. Let's get to a little bit more of those COVID headlines. We talked about COVID-19 cases in the UK rising the most in the world as virus restrictions ended in England. New York City, no plans to renew indoor mask mandates. We know what's going on in LA. Southeast Asia continuing to reel from a fresh wave of the virus. Well, earlier today on Bloomberg TV and radio, Dr. Anthony Fauci caught up with our own David Weston to talk about the rising cases and his plea to people. Check it out.
But among unvaccinated people, that's a significant risk. And that's the reason why we are practically pleading with people to please, if you're not vaccinated yet, seriously consider getting vaccinated, because this is a nasty virus, particularly if you're unvaccinated.
All right, of course, Dr. Anthony Fauci there earlier on Bloomberg Radio and Bloomberg TV. Let's see what our next guest has to say about all of this. Dr. Justin Zaghi is with us. He's Chief Medical Officer at LA-based HEAL. They provide telehealth services and doctor house calls to over 75 million Americans. He's on the phone in LA. Dr. Zaghi, good to have you here. How are you? And tell me what you're seeing when it comes to COVID cases specifically out there on the West Coast.
Hi, Carol. Thank you so much for having me on your show.
Sure.
You're right. I'm based in Los Angeles, and in Los Angeles, there's been a significant rise in COVID cases, over 100% in the past 2 weeks. And it is quite concerning. And as a result, as you know, Los Angeles has reinstated the mask mandate. There are breakthrough cases happening. Obviously, vaccination is the most important thing for people to do. And even among those who are vaccinated, there are some breakthrough cases. So we are seeing some patients who have been vaccinated and are getting the vaccine. That being said, those who are vaccinated have a much lower likelihood of ending up in the hospital or of dying. And so we do strongly urge all of our patients to get vaccinated.
Of those people who are not vaccinated and get this COVID-19 as a result of the Delta variant, how bad is it?
It can be quite severe. In fact, it's the most contagious and we think the most severe strain of the COVID-19 virus. It's thought that this is actually 215% more contagious than the original strain, right? Which explains why it's spreading like wildfire and why people who've even been vaccinated are getting it. However, the distinction is that if you have been vaccinated and you get it, you'll be much less likely to have severe consequences, meaning much lower likelihood of dying from the vaccine, much lower likelihood of ending up in the hospital, and also less severe symptoms just generally. You may have some, cold-like symptoms, cough, fever, and in some cases it can be more severe, but generally if you're vaccinated, that's the best line of defense we have.
The country overall, and I feel like the world overall, continues to, in a large way, of course it's not a straight path forward, continue to reopen, but it's tricky. Do the lifting of restrictions, and the continued reopening make you nervous?
You know, I think it's a balancing act, right? Keeping things closed has significant consequences on everyone, right? We've heard of the impact of the lockdown on school children, for example, and the impact it has on their development, with the CDC coming out and saying that we need to reopen schools because of the impact of the lockdown on children. Similarly, you know, we were just hearing on the headlines about the impact on the stock market and travel and people's mental health. You know, I'm seeing a lot of patients with depression, anxiety from the lockdown. And so there is a significant cost associated with the lockdown and with these restrictions. At the same time, for a long time, it has been our best defense against COVID-19. The silver lining here is that with vaccination, you know, that will free us up to open up even more, right? And will allow us to avoid these restrictions and will help us to return to more normalcy. It's really a balancing act, but again, if I can give one message to our listeners here is, if you have not yet been vaccinated, to please do consider getting vaccinated, because this is our way of freeing ourselves from the shackle of COVID-19 and going back to more normalcy.
What's your thoughts on people wearing masks, even if they're vaccinated?
You know, I think that, I'm as difficult as it is in Los Angeles with wearing indoor masks. I do think it's the right call, right? Because we have been seeing significant rise in cases. And, you know, whereas a complete shutdown has significant impacts and is really challenging to do, simply telling people to wear a mask when they're indoors is less restricting than, you know, not leaving the home at all or limiting contact completely. And I do think that, you know, given that we're seeing breakthrough cases in people who are vaccinated, I think it makes sense to have people wear face masks indoors, right? And I think that this will just help protect both the vaccinated and unvaccinated people in our communities, and just a way to mitigate the growth of the virus until more people are vaccinated.
Great to check in with you. Thank you so much, Dr. Justin Zaghi. He's Chief Medical Officer at Heal, on the phone in LA. Check out their website, their business, where they are doing telehealth and Dr. House calls, growing 600% since May due to the COVID-19 demand. Of course, he is Chief Medical Officer at Heal, as we mentioned. They are LA-based. All right, you are listening to Bloomberg Business Week. Coming up, we continue to track the markets. We are just coming off our lows of this session. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, no doubt about it. There's a massive countdown clock in Texas underway. We've been talking about it for the last week. Ever since Richard Branson went into space, we've been talking about the second billionaire getting ready to do so, and he does that tomorrow. Jeff Bezos of Blue Origin will head into space tomorrow. Tim Stenovic, my co-host, is actually down there on the ground in Van Horn, Texas, so we're going to check in with him in just a moment. Let's get back, though, to your top business stories. A check on that market sell-off. Here's, once again, Charlie Powell.
Hi, thank you very much. The Dow, the S&P, NASDAQ, lower across the board at the worst level. The Dow was down 946 points. Right now, the Dow is down 872, and that is a drop of 2.5%. S&P 500 index down 85, a decline 0.3%. 10-year up 30 seconds. 10-year yield is actually 1.18%. Stocks are slumping around the world as investors rush into haven assets after the Delta variant cast a pall over the economic recovery as tension between the U.S. and China escalates. Gold is down 0.2%, 1807 the ounce. Bitcoin down 3%. West Texas Intermediate crude has plunged 7.6%. WTI 66.64 a barrel. Again, that 10-year 1.18%, with the S&P down 87, lower now by 2%. CDC says Americans should avoid travel to the UK if possible because of a surge in that nation's spread of COVID-19. That according to U.S. health officials who are raising their warning to the highest level. Stalling vaccination rates and rising cases in the U.S. are also affecting market sentiment today. One issue for health experts is combating misinformation on social media. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
The misinformation that's out there, the fact that people are hearing again and again and again things that are just flatly untrue about the virus, just shows how powerful a force it is. We don't have that kind of partisan divide on penicillin, but we have it on a COVID vaccine in the middle of a pandemic.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow on a regular basis, Pfizer down 1.1%. Its German partner BioNTech, the ADRs there, up 5.3%. AstraZeneca's ADRs down 1.2%. Moderna surging today by 9.5%. J&J Johnson & Johnson down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And so one of the stories, thank you very much, Charlie, one of the stories on Charlie's radar, on my radar, and everybody's radar is we're watching the continued pursuit of space. And, of course, over the last week, we were all in on Richard Branson and his Virgin Galactic heading into space. This is one of the stocks that has been on a tear. Its short position has also, its percentage of float that has been shorted has also been moving up. But Virgin Galactic shares, if you take a look at them, they are on a tear once again today, up about 8% in today's session. That stock's up 37% so far here in 2021, and it just continues to move higher. Again, so much focus. We talk about it a lot, investors, just what's going on when it comes to private space specifically. And then, of course, we're looking at Amazon today, which that stock and the Blue Origin, of course, owned by Jeff Bezos. Amazon shares are down about 1.6% in today's trade, but we're definitely focused on it. Let's get to my co-host, Bloomberg Quick Takes, Tim Stenovic. He is in Van Horn, Texas. He joins us now on the ground there. I don't see any rockets behind you. I just see a truck, which is very typical in Texas, and a building. Where are you?
I'm in Van Horn, Texas, Carol, and you can't see any rockets behind me because Jeff Bezos' ranch, where he does have the launch facility for Blue Origin's New Shepard rocket, which is the stack that is getting launched tomorrow, if all goes according to plan, I should say. That's about 40 miles away from here. So I'm actually not very close to the launch site at all. It's really difficult to get inside the launch site and actually to the launch site. Even the people who will be granted access tomorrow, our Bloomberg colleagues who will be there, still will not be able to get very close.
Well, it's a rocket. You got to be careful, right? And there needs to be distance.
Yeah, It's not like last weekend's launch with Richard Branson, where you could actually watch, this dual fuselage aircraft take off at an airport the same way that an airplane would. You're right. This is a rocket where there is fire coming out of the bottom of it. So it has to be watched at a distance. In fact, yesterday at a launch briefing, Carol, they reminded people who had come to town or who wanted to come to town, space tourists, people who wanted to actually see this happen, they reminded them, hey, do not try to actually make this happen. Don't try to hike to somewhere. Don't try to go somewhere in the desert. This is the desert we're talking about. I mean, I'm here under shade right now, Carol, in 85, 86 degree weather, and I'm still, drinking a ton of water and I'm sweating a ton all day. They don't want people out there in the desert trying to watch. The Department of Transportation here in Texas is closing the highway in order to prevent people from getting out there.
Listen, give us the lay of the land. I've been following you on Twitter and our whole Bloomberg News team that's down on the ground. Emily Chang of Bloomberg Technology tweeting a picture showing the desert and how dry it is. What is the town like? What's been the experience since you got there? And, well, wait a minute. First of all, I've got to ask you, first time on a plane in, what was it, 16, 17, 18 months? What was that like?
Yeah, March 2020 was the last time I flew anywhere. Okay, so my big takeaway, Carol, and this is like something that I think we're going to be talking about a lot when I get back, and we have been talking about, the labor shortage is in full view everywhere you go in airports right now. I got to the check-in very early, 2 hours early to check a bag, and I still had to wait an hour to do it. They just did not have enough employees. TSA was actually a breeze, weirdly.
Right.
But every restaurant or try to get coffee somewhere, lines. A lot of stuff still closed, but it doesn't seem like they have capacity for the demand that we're seeing right now. As far as flying, I was just listening to your previous guest. It was a little nerve-wracking because of COVID.
Yeah.
I wore a mask the whole time. All the passengers around me wore a mask the whole time. So once I settled in, it was all good.
I was talking to an airline executive over the weekend who said, really waiting for September to see that, that the expectations are that we start to see workers really come back in full force. Listen, I am, as you know, a daughter of a scientist or engineer who was involved in early space exploration. Things can go wrong. What happens if there's a disaster? We've got about 40 seconds.
Okay, so Blue Origin has tested crew escape from several different stages, every stage throughout the flight, basically. If it happens when it's still on the launch pad, if it happens on the way up, and if it happens on the way down, they say that they can get out of there safely.
All right. Are you excited, though?
I'm very excited, yes. Right now, Carol, everything is going according to plan. They're still set to launch 9 a.m. Eastern Time. Tomorrow, we will bring you live coverage. I'm here with many of our Bloomberg colleagues, and we're working around the clock to bring it all to you guys.
Is that your pickup truck behind you? I know the folks on radio can't see it, but there's a brown pickup truck. You see a lot of pickup trucks in Texas.
I asked. Everywhere. I asked for a pickup truck. They only upgraded me to like a mid-size sedan.
Sorry, Tim. All right, sit tight. We're going to come back to you a little bit later on and get more with my co-host, Tim Stanovic, of course, of Quick Take. And as you heard, he's on the ground there in Van Horn, Texas, ahead of Blue Origin and Jeff Bezos. They're heading off into space tomorrow morning, Tuesday morning. All right, let's get back to World and National News. Nancy Lyons, take it away.
Thanks, Carol. The U.S. Senate's Democratic leadership wants to set the procedures in motion this week to act on the infrastructure spending bill, even though the bill itself is still being negotiated. Some are still expressing concerns about the price tag.
Fears that the extra spending will lead to extra inflation are overblown, economist Megan Green of the Harvard Kennedy School said in a Bloomberg interview.
A lot of that will go towards public investment, and so that should fundamentally boost the economy to a higher potential growth. Infrastructure spending and also investment in human capital will probably take just under a decade to release all of this spending.
Another reason that inflation is unlikely, Green said, is that the service jobs currently being added to the economy are largely low-skilled, therefore would not produce significant wage inflation. In Washington, Irv Chapman, Bloomberg Radio.
Senate Democrats are taking aim at the new voting laws in Georgia. They're holding a rare Senate field hearing in Atlanta, where Senator Raphael Warnock said GOP-backed voting restrictions are fueled by former President Trump's big lie that the election was stolen.
And sadly, what we're seeing in Georgia is an attempt to deny certain people the ability to have their voices heard in our democracy. As I've said time and time again, some people don't want some people to vote.
Warnock called for passage of federal legislation to protect basic voting rights, calling it an urgent priority. 5 Texas state Democrats have now tested positive for COVID-19 after traveling to Washington, D.C. last week. No names have been given, but the caucus says all members who tested positive have no symptoms or only mild symptoms. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser in our Interactive Broker studio. You just heard from my co-host, Tim Stanovic. We'll hear from him a little bit later on again here on Business Week. Charlie Pellet with me of Bloomberg News. Charlie, a story by our Monica Gregg of Bloomberg News. Uber Technologies accelerating its on-demand grocery delivery service in the U.S., more than doubling the cities where it is available and partnering with a major grocer as the pandemic fuel delivery competition heats up big time.
Yeah, when you think about the timing, it absolutely makes sense. If people, have gotten used to staying home and ordering from home, people working from home, spending more time at home, why not have the groceries delivered? Obviously, a lot of services in this space, but now Uber, they've got Uber Eats, of course, the Uber ride-sharing service, ride-hailing service, as we all know, but also, too, Uber Eats and Uber delivery, grocery delivery, that's an area that they see for more growth.
Well, and what's cool about this is Uber signing up with Albertsons to give Uber customers access to 1,200 of its stores, including Jewel Osco, Safeway, Acme, Randall's. Uber putting this out in a statement to tempt new customers, Charlie, to choose Uber over competitors. Customers who spend more than $30 will get waived delivery fees and will also be able to request on-demand and scheduled deliveries. So really trying to entice people. But, this is giving Uber, it's like Amazon, right? They have Whole Foods where they can do a direct channel to a supermarket chain. And so this is Uber directly connecting with one particular chain who owns a lot of stores around the country. I've talked with the CEO, and this is a way of maybe building up its business. But you know what? I have a feeling those delivery fees will come later on.
Indeed. And, yeah, you can count on that. But also, too, as we mentioned, Albertsons, one big supermarket company, Jewel Osco, Safeway, Acme, Randall's, among many others. And should point out that, yes, the market is lower across the board today, but shares not only of Uber, but also Lyft, they are both trading lower. Uber down right now by 1.6%, Lyft dropping by 3.9%.
And right now, this on-demand grocery market is currently dominated by Instacart and Walmart and some smaller startups such as Avo. So the competition is increasing. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. The Dow, the S&P, NASDAQ all slumping, not just here in the U.S. Markets lower around the world. Investors rushing into haven assets after the Delta variant cast a pall over economic recovery. Tensions between the U.S. and China escalating. S&P down now by 90, a drop of 2.1%. Very close to the worst level of the day. S&P have been down 94, down 2.2%. The Dow now down by 907 points, a decline of 2.6%. NASDAQ is down 207, a drop of 1.4%. NASDAQ 100 index down 1.3%. 10 years up 31 seconds. 10-year yield 1.18%. Gold down 0.2%, 1807 the ounce. Bitcoin down 3% right now. And West Texas Intermediate crude has plunged 8%, 66.01 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As Dave Wilson pointed out, the ARK Innovation ETF, it's up 1/3% in this overall downward market trend. All right, let's get to it. An online story at Bloomberg.com, and at BloombergBusinessWeek.com, I should say. And who knew, from the iconic Weber to the BBQ guys, grill makers are the hottest thing when it comes to post-pandemic IPOs. Let's get into what's going on. Joining us is Bloomberg News deals reporter Crystal C. and Bloomberg Businessweek editor Joel Weber, both in our Interactive Brokers studio. Are you grilling a lot?
You know, you would think that I would grill every day since my last name is Weber and it's spelled the same way. So let's just get that out of the way to start with. I'm not related. Jeez. If I were related, you know, I wouldn't be sitting here right now. I would be, you know, getting ready for an IPO at a grill. But the story is really interesting, I think, because it speaks to, I mean, do you remember, like, not that long ago, Carol, where we were talking about, like, the dearth of companies that were in the public markets or going public, and then all of a sudden, you know, we just had a huge change to that. And companies like Weber and now Traeger, who you would think would have remained private for as long as they wanted, are testing the public markets.
Yeah, exactly. So, Crystal, come on in on this and your story here in terms of what we're seeing, because it is a really hot part of, no pun intended, hot part of the IPO market.
Yeah, actually, there are two IPOs, like you mentioned, Traeger and Weber. There's also a SPAC deal. And after we published this story, we actually found out there's a fourth company in the grill space going public. It's called Solo Stove. So, like, I think people are just, like, wondering, like, why are there so many grill companies? And the biggest question, though, is as everybody starts going out again, like, are these companies going to be as hot as they were during the pandemic? And that's the question that we really try to answer here.
And so, first of all, why do we think that these companies who have been private and clearly, you know, had a good run in the private market for so long, why do we think they're going public all of a sudden at the same time?
Yeah, so the interesting thing about this is that they're not using the proceeds to grow the company. Like you said, they've been around for the longest time. They're actually very established. They're very profitable. A lot of the existing investors are actually using this as a good opportunity to cash out. So as equity market is at all-time high, what's better way to do it other than do an IPO? And
do I hear top? Peak?
It sounds
is that
right.
How we should
it's
read
hot
it?
for sure.
Is that, I mean, I guess the question is on the other side of the pandemic. We are a grilling family. My husband's out there in December, January, grilling often on our porch. But I mean, does the grill craze continue?
Yeah, we asked that question. The banker that I spoke to from Citigroup, he was saying that he grills actually when he was working from home. So this is the potential hybrid working model. You know, if you're home and you have a lunch break, you can just go out for a 15-minute break, grill a steak or grill like a burger and come back in. So that potential longevity of this hybrid working model could benefit them. But also he's saying that people are picking it up as a hobby. It's not just that a one-time purchase. You're also buying the accessories. You're also like topping up on your existing grill. So even though that one-time big ticket item was bought this year, there are potential purchases coming up.
My joke on this story when we were first kind of kicking it around was like, to me, you know, the Weber especially, it's like, this is a 100-year-old piece of technology that really has not changed at all. It's like you put fire in a metal thing and get what you get. And What's interesting though is as I sort of like started reading around the story, there is actually some tech going on that's pretty great too. And Crystal, why are grilling heads so excited about where the two companies have gone?
It's become like a IoT device almost. A lot of these grills, especially the higher end model that could cost like thousands of dollars, they are tech enabled. You can connect it to your Wi-Fi. There's an app and you can control the temperature. So you don't really have to like stand around and wait for your meat to smoke for 14 hours. You can just go to bed and the next morning it's there. So that really just, transformed the company into a bit of a tech company, and obviously the tech valuation is very favorable.
Well, the other thing is, right, there's the grills. We're a grill and a smoker house. I mean, I've woken up in the morning or in the middle of the night and, there's brisket that's been cooking for hours. I mean, that's another part of this story, right?
I think the other part of the story is that I need an updated invite to come over to your house.
It's really good.
I hadn't had one of those for a while.
It's really good.
Yeah, but that's true. Like, people often have more than one of these devices.
Yeah.
Like, you have different needs, and people are getting more and more into these cooking hobbies, and you have all these cooking shows that are building big bucks, and they often advertise on these YouTube cooking shows or like magazines that are food related. So yeah, it's a big business.
I still can't believe I didn't think Weber. I'm really upset.
I'm shocked.
No, I'm a little slow today.
The other thing that it bears mentioning here is like, there's the company aspect of that, but the Mannings actually figure into this one.
Mm-hmm.
Talk to us about what Eli and Peyton have pulled off.
Yeah, they are actually existing back of BBQ Guys, which is a retailer for barbecue grills, and they're going public through a SPAC, we've reported. SPAC is another hot topic of the year and the past 2 years, and a lot of the SPAC deals tend to be unprofitable companies or companies that are looking into very, very far ahead in the future, like the space traveling, electric vehicles. So it's not often that you get actually a profitable company that has an established track record. So this could really get people excited, not just because of the grilling element, but that it seems like a legitimate company.
So can I throw in pools into this?
Why not?
Because that's part of it. I do not have a pool. I have a city backyard. It's really small. So pools are part of it, right? That they have also taken off.
Yeah,
it's part of this story.
It's the entire home improvement trend that we saw the past year. At least 3 pool companies have gone public in the past year. All have seen shares rose more than 40% during this period. So everything that involves your immediate surrounding, i.e. your home, is getting an upgrade, and all of these companies are benefiting.
And it makes me just think, like, especially off of today's headlines and everybody getting cold feet, it's like, this is exactly what that trade's about, which is like, how can you find some companies that are benefiting from, longevity of people staying at home?
Right. This like peak growth idea or peak pandemic plays. Having said that, Robinhood is also something, just to do a quick before you leave, Robinhood going public. How do we read that? Is that a sign of a peak in the market or something else?
They are also a pandemic beneficiary.
Yeah.
They actually acquired a lot of volume, a lot of users during this, work from home period where people had not much to do except for sitting home and trading stocks. And what we know is that they are going to list on July 29th and a 10-day roadshow all done virtually. And they will have a huge component in the IPO allocated to retail investors, which are their own users. It will be allocated through their platform, which is something that has only been done like 1 or twice. So it will be interesting how it turns out.
All right, Jill, given a choice between a grill, a smoker, a pool, and a piece of Robinhood, what would you take? You can also say none of the above.
I'll take, being a Weber, even though I'm not related to the Weber, there is nothing I can, just embrace the namesake, I think, and go with the grill
How did
or
I
the
miss
smoker.
it? For the weekend show, I'll have to work it in. Jill Weber, editor at Bloomberg Business Week, here in our Interactive Brokers studio, along with Crystal C., Jill's reporter at Bloomberg News. Check her out on Twitter and also at Bloomberg.com. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Business Week, we're going to come right back. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that's coming up next.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final hour of trading on this Monday, July 19th. The Dow, the S&P, NASDAQ bouncing off the bottom, very close to session lows. Right to the numbers. We begin with the 10-year. The yield there, 1.17%. The S&P down 90 points now, down 2.1%. The Dow is down 903, lower by 2.6%. And NASDAQ is down 205, a drop of 1.4%. Stocks are slumping around the globe as investors rush into haven assets after the Delta coronavirus variant cast a pall over the economic recovery. Tensions between the U.S. and China are escalating. Again, that 10-year yield, 1.17%. We've got gold down $4 the ounce at $18.07, down 0.2. West Texas Intermediate crude has plunged 8.1%, 66 even a barrel. As for the inflation outlook and the Federal Reserve, Subhadra Rajap is head of U.S. rate strategy at Societe Generale.
I think that the Fed feels like they've reached their substantial further progress mandate on inflation. Really, the concern now is on the employment front, and we need to see anywhere between 500,000 to 1 million jobs being created for the remainder of the year. And that, I think, is going to be the key for both policy as well as for Treasury yields moving higher.
The National Bureau of Economic Research's Business Cycle Dating Committee says America's coronavirus-induced recession ended in April 2020 after 2 months, making it the nation's shortest downturn on record. That committee is an academic panel that serves as an arbiter of U.S. expansion dates. Oil is plunging. Oil stocks lower. ExxonMobil, for example, down 4.3%. BP down 4%. Chevron lower by 3.5%. EOG Resources down now by 5.6%. Pioneer Natural down 3.6%. USO, that is the United States Oil Fund ETF, down by 7.2%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Masser, and this portion of Bloomberg Business Week brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS. All right, let's get to it, because the U.S., UK, and their allies formally attributed the Microsoft Exchange hack to actors affiliated with the Chinese government and accused the Chinese government of a broad array of malicious cyber activities, escalating last week's tensions between the White House and China. That's one of our big macro stories today. That we're going to get into, plus how China's crackdown on ride-hailing giant Didi raises a lot of questions about the future of foreign investment in Chinese startups. It's two big themes that we've been talking about ongoing with our own Andy Brown. He is Bloomberg New Economy editorial director, and he joins us on this Monday on the phone in New York City. Andy, let me just start with, first of all, the headline here about the U.S., the U.K., and their allies, formally pointing the finger at the Chinese government for that Microsoft Exchange hack. I don't know. How do you assess the damage of something like that, or how do the two sides navigate through something like that?
Yeah, well, this really is huge. This has been going on for years. I think that's you have to recognize that these accusations of Chinese cyber attacks have been poisoning U.S.-China relations for more than a decade. And this one really sort of recalls an episode that I reported on extensively. It was about a decade ago when Chinese military hackers got into Google's servers and came very close to stealing Google's source code. And that triggered a whole chain of events, which ultimately led to Google exiting China or taking its search engine out of China. This one, I think, is significant that Microsoft is at the heart of it, another iconic U.S. tech company, but also one that has invested over the years massively in China, in spite of not getting much revenue out of China at all. I mean, Microsoft has been so dedicated to China's economic and technical development. It has its largest R&D unit in the world, facility in the world, outside of the United States in China.
So, layer on top of that what we've been seeing in terms of the Chinese government's crackdown on big Chinese tech companies, concerns about information. We see it, as you write about, again, about Didi. What does it mean longer term, Andy, when it comes to foreign investment in Chinese companies or in China at large? You know better than all of us, and anybody who's been reporting on business news for a long time, is that, global multinational companies, all they wanted to do is have some kind of presence in China, and we're really kind of willing to do anything to have some kind of footprint on the ground. Does that change going forward because of all of this that's going on?
Look, I think you have to see this in the context of a steady deterioration in U.S.-China relations. I mean, it just seems like we're getting, revelations almost daily. So just in the last couple of days, the Biden administration has warned U.S. companies against doing business in Hong Kong. Janet Yellen, the Treasury Secretary, U.S. Treasury Secretary, has announced that she's not going to restart the security and economic dialogue, which has been the prime platform for U.S.-China negotiation on their bilateral relationship since the George W. Bush administration. Janet Yellen also, in an interview with the New York Times, has called into question whether or not the U.S. is going to, is going to keep to this the trade agreement that was the crowning achievement of, the last Trump administration. So it really is all sort of falling apart. And then, you look at this episode with Didi and the announcement basically by the Chinese side that they're not going to allow Chinese companies to list in the U.S. And now you start getting capital market decoupling on top of all of the rest of it.
So, Andy, there are worries, right? And then there are the financial markets and investors who say, yep, I'm worried, but I still see opportunity. You actually caught up with one that I think is a really key voice in trying to figure out, what does this mean? What are the investment implications when it comes to what's going on in China?
So I think two things. First of all, investors still largely see opportunity in China. That tech investors in particular see China as being, the fastest growing source of consumer demand in the world. And so they're going to be there. That's the first takeaway, regardless of everything that's going on. But what they are seeing is a lot of disruption in the near term. The reason that China was actually encouraging its tech companies to list outside of China is because the regulators within the financial regulators within China understood that Chinese markets simply weren't ready for that volume of IPOs. And what's going to happen now, according to the investors that I've been talking to, is that they're going to list now in China, which, and by the way, it takes a lot longer to list in China than it does in the United States. And this is potentially going to deter investment in startups and damage China's entire innovation ecosystem.
So there will be some implications. It definitely.
Yeah, real short-term disruption in people forget actually that the initial wave of Chinese tech companies were funded and nurtured by foreign investors, most of them U.S. investors. And even though that balance has now shifted, where most of the money is coming from China, foreign investors still have a critical role to play in the development of Chinese is technology. And this calls into question whether or not they're going to be able to freely invest.
Well, I highly recommend everybody check out Andy's latest column because it does have his interview he did with Gary Reichel, who he and his firm have invested in college endowment funds and a number of Chinese unicorns. So there's this incredible back and forth between Andy and Gary. Andy Brown, thank you, editorial director of Bloomberg New Economy. All right, back to world and national news and D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol, President Biden says 6 months into his presidency, he is proud of what he's accomplished.
For all those predictions of doom and gloom 6 months in, here's where we stand. Record growth, record job creation, workers getting hard-earned breaks. Look, we brought this economy back from the brink.
Biden says a significant portion of the recent inflation is tied to sectors experiencing parts shortages or surging demand with the economy reopening, things like cars, hospitality, and lumber. His comments come as lawmakers continue work on an infrastructure plan and a budget blueprint with the expansion of social programs. Senate Democrats have taken their fight for federal voting rights legislation to Georgia today. The Senate Rules Committee is holding a rare field hearing in a state at the center of a national fight over elections. Senator Amy Klobuchar says Republicans are moving state by state to restrict voting access.
The location of today's hearing, the National Center for Civil and Human Rights, is a powerful reminder of how our country has long fought against the forces of injustice.
Republicans on the committee did not attend the hearing. More than 80 large wildfires are burning across the West, aggravated by the worst drought this century. This week, FEMA Administrator Deanne Criswell is expected to make her first trip to the states most impacted by the fires: Idaho, Oregon, and California. Axios is reporting she'll be meeting with federal, state, and tribal partners and emergency groups to discuss a plan of action. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So this is our second most read story on the Bloomberg in the past 8 hours. It was #1 for a long time. Markets now superseding that. But this is a story by our Heather Perlberg. And joining me right now to talk a little bit about it is our own Charlie Pellet of Bloomberg News. Charlie, this is about Leon Black. Our audience knows who he is, founder of the private equity behemoth Apollo. And he, of course, is a billionaire. And it reads like this, and I'm going to read it verbatim. It starts with, she said she was raped by one of the most powerful men on Wall Street. Now he says she professed her love during a years-long affair and that he was later extorted for millions. It is really about the back and forth, two stories, very different accounts of the relationship between Leon Black and a Russian model named Guzel Ganeyeva. And this is all a court case and court filings going back and forth.
Indeed, and Black today vigorously denying Ganieva's allegation that he assaulted her, instead admitting to an affair in a court filing, saying, quote, he did use extremely poor judgment, but both sides acknowledge this much. According to Heather's reporting, for years, the married Black, then head of Apollo Global, had a sexual relationship with Ganyeva, who's about 30 years younger than the father of four, but there the accounts diverge and open a rare window into the private life of one of the most formidable figures in American finance.
It's why it's trending high on the Bloomberg, right? This is someone who actually, if you remember, I believe was a cover story of Bloomberg Businessweek magazine. It was a great in-depth profile and some incredible reporting about a firm and an individual, Leon Black, who didn't talk a lot and he was certainly known on Wall Street, but was somebody who was out there speaking a lot to media outlets. And so this story, as you said, Charlie, is a bit of a window into his private life and what was going on, and two very separate accounts by obviously two individuals who seem to have had a relationship, but the way that you see it is very different.
Indeed, and no doubt why it's our second most read story on the Bloomberg. Lots of detail here.
Yeah, absolutely. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower across the board. Do want to begin with a developing story headline from the Bloomberg Professional Service. Tiffany and Costco have settled an 8-year lawsuit over fake rings. This according to Reuters. Now let's head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, it's been a brutal day for stocks, with the market down the most in 2 months as virus jitters fueled an investor rush to safety. The Dow is down 865 points, S&P is lower by 85, and the Nasdaq is off 195 points. The U.S. 10-year yield is at 1.17%, trading below 1.2% for the first time since February, and small caps are lower by 30 points. All 11 of the main S&P sectors are trading lower, led by losses in energy and financials. Nasdaq Biotechs rise 45 points, transport sink 265. Crude oil is down 8.1% to $66 a barrel, while the VIX is higher by 31%. No stocks in the Dow Jones are trading higher, with Boeing, American Express, and Dow Inc. as the worst performers. Regarding deal news, Zoom Video slipped after a deal to buy Five9 for $14.7 billion. Bill Ackman abandoned his Universal Music SPAC after backlash from the SEC. Robinhood Markets is seeking a valuation of $35 billion in its IPO, and activist investor Elliott pressed Duke Energy for leadership and strategy changes. Wrapping things up, look for earnings from IBM and Steel Dynamics after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
And we thank you very much. One additional headline to pass along to you. The U.S. State Department raising its UK travel warning, says do not visit. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So among our most read on the Bloomberg today is about how Wall Street is paying more than ever to cloak a brutal work life, including in some cases a 5-night stay in the Caribbean. Just all I want to say is sign me up. Here with that story is Anders Mellon. He is wealth reporter at Bloomberg News. He's in our Interactive Brokers studio. This is no surprise among our most read. So tell us what's going on. I mean, this is the story we've been talking about, right? The folks that are bankers or junior investment bankers, they are getting tons and tons of perks thrown at them.
Yes, we've been seeing that over the spring and the summer, how banks almost in lockstep have been raising entry-level salaries for them. It's up to 6 figures now at many of the Wall Street banks for incoming analysts. And associates and VPs are getting raises too. And in some instances, one-time bonuses. And in rare instances, like at Houlihan Lokey, a Barbados resort vacation, all paid for by the bank.
That's more of a mid-level size firm, right? Or smaller size firm. I mean, it's not one of the big Wall Street banks, but nonetheless, they're competing for talent.
That's right. They are competing for the same type talent.
So what is going on here? And you and I were talking before we got going, Anders, about Goldman Sachs, that report by the first-year junior bankers, right? They got together and put together a report. This is like what you want in an employee, like take initiative.
Totally.
They took initiative and said, we're working really hard. And that was, I don't know, earlier this year, right?
It was earlier this year. It was a group of analysts who essentially put together a deck outlining that they work up to 100 hours a week, even more sometimes, and that it was just untenable. They were getting burnt out and just not really what they wanted, and relay this to senior management. And it led the CEO to say, okay, we're going to start enforcing even stricter a rule that you should not have to work on Saturdays anymore. As one of the people that I spoke to this story pointed out, that policy has been in place for 8 years already. It was put in place in 2013. So it is perhaps telling to see that rules for keeping weekends free for analysts are still kind of, at least according to this analyst report, being overstepped.
Help me out here. Having reported on business schools and getting an MBA for years, I mean, this was what you did. You got an MBA, you became a junior banker, you worked your tail off, and then you made big banks by either going up the ladder at a firm or you went off to another firm. What happened? What's changed in how junior bankers are thinking about, this professional path?
There are more career opportunities now, and those career opportunities are increasingly attractive and also increasingly lucrative, even at par with, or in some cases even better than banking. And we're thinking of tech, fintech, venture capital, places that have a financy bent to it, but you may have a better work-life balance. You might work in a slightly more relaxed environment, and there might not be the same demands of the face time that you typically see in finance, and that sort of sits in the walls at some of these banks because that's what senior executives went through.
Well, those senior executives, those senior bankers, those CEOs, they're all understanding. They get it, right?
Not all of them. Okay. Some have been more understanding than others. My personal favorite was Howard Lutnick, who said that if you're not up for working long hours, then perhaps finance is not for you. There are others that have taken a bit more of a middle-of-the-road approach and said, we're going to try to work on this and make it better for our junior bankers. But there's a clear culture divide here between more senior people and more junior people.
Well, and it's not just, as you point out in your story. I mean, we talk about it a lot here at Bloomberg. It's our audience. It's what we track at the terminal, the financial firms, what's going on. But we're seeing it across corporate America, too?
We are. It's a hot labor market, and there's a lot of movement. And I wrote a story about a month ago about people who quit their jobs because they were called back to the office and they just didn't want to do it. And that sparked a ton of attention. And this is clearly something that's on the minds of Americans all over in every industry.
But people are quitting but finding a new job, right? But just something different.
That's right.
Because, people have to work. We know that, right?
Yes, people still have to work. And people want to work. You just perhaps don't want to just work. You want to live too.
Yeah. Are there any expectations, just got about 20, 25 seconds here, about maybe in September we'll get a clearer picture if this continues, kind of the pressure within the financial sector?
I think it will play out over time. We'll see what the return to office turns out like, because it's still summer. Not everybody's back, but the call is soon going to come in, I'm sure, at some of the companies.
So meanwhile, it's a 5-night stay at a Caribbean resort for a Houlihan Lokey, right? That's what they're offering for the junior bankers.
For some other bankers, yes.
All right. It's an interesting time, no doubt, when you're working on Wall Street, especially right now. Anders, thank you. Really appreciate it. Anders Mellon, he's wealth reporter at Bloomberg News, here in our Interactive Brokers studio. Check him out at Mellon Anders on Twitter. All right, coming up next, we're going to check in with Tim Stanovic on the ground there in Texas ahead of Jeff Bezos taking off into space. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week on this Monday, July 19th. Carol Master in our Interactive Broker Studio. We're going to catch up with my co-host Tim Stenovic on the ground in Van Horn, Texas, ahead of Blue Origin's blast off into space. We'll check in with him in just a moment. Also coming up, the chart of the day with our own Dave Wilson. First up, though, let's get another check on that trading day. 29 minutes to go, Charlie Ballard.
Indeed, and can't forget the song of the day coming up with our Dave Wilson. We've got the Dow, the S&P, NASDAQ all on the minus side. Right to the numbers. We'll give you the why in a moment here. 10-year yield, 1.17%. Worth repeating, 1.17%. S&P down 88. Drop there of 2%. We have got the Dow down 881 now, down 2.5%. NASDAQ down 216. Drop there of 1.5%. 10-year yield, as I mentioned, 1.17%. We've got gold down 0.2%, 18.08 the ounce, and West Texas Intermediate crude. Major story today, getting lost in the news flow, plunging 8.3%. WTI down $6 the barrel, 65.83 on WTI. Stocks slumping around the world as investors rush into haven assets after the Delta coronavirus variant cast a pall over the economic recovery. Tension between the U.S. and China is escalating. The State Department, meanwhile, raising its travel warning for the U.K. to the highest level, advising citizens not to travel there because of an increase in COVID-19 infections. Stalling vaccination rates and rising cases in the U.S. are also dragging down market sentiment today. One issue for health experts is changing the minds of vaccine skeptics. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
These are the people who, they get COVID and they almost die, and they say, well, what do you think about getting a shot now? And they go, I'm not so sure. I hear it might not be safe, and you got to scratch your head and go like, how could you have that view, given that there are 150 million plus people who've been vaccinated safely and you almost died from COVID. So it's really difficult when you get there.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we follow, Pfizer down 1.1%. BioNTech, its German partner, the ADRs up 4.6%. AstraZeneca's ADRs down 1.1%. Moderna ahead of its inclusion in the S&P 500 index out of Cambridge, Massachusetts, up 9.5% right now. J&J Johnson & Johnson down 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. For those of you just joining us, as you may have heard, my co-host Bloomberg Quick Takes, Tim Stenovic, he is on the ground in Van Horn, Texas, ahead of Jeff Bezos and Jeff's Blue Origin's blast off into space. That happens Tuesday morning. Tim's going to be there walking us through that takeoff. Tim joining us once again from Van Horn. So, Van Horn, I have a lot of family in Texas who I love and adore. Houston, San Antonio, Austin. Where is Van Horn? It's at the very bottom?
So it's actually pretty close to El Paso. It's far west Texas, Carol. In fact, it's really close to the U.S.-Mexico border. And for anyone who's flown into El Paso, you can see the two different cities because the border goes right through Juarez and El Paso. And you kind of hug that on your way on Interstate 10, on your way from El Paso to Van Horn. If I kept driving, Carol, on Interstate 10, I would have hit your family and in some portions of as I go further east.
So what's the feeling on the ground there? Here we are. We've coming a week after roughly Richard Branson going into space. This is a different type of journey.
It's a completely different type of journey. I mean, some would argue, and I think Mr. Bezos would argue, that this one is really going to space because it does go past the so-called Kármán line, that 100-kilometer imaginary boundary that the international community considers the real definition of space. Remember, NASA's definition is above 50 miles and above, and that's about where Branson went 10 days ago when he flew on Spaceship Two and Virgin Galactic. The feeling on the ground here, though, is really one of excitement, Carol. I don't know if you heard, but somebody was just honking at us as you came to us, as they were driving by. We've had that several times throughout the day. Some people have stopped to talk to us and just said how excited they were that this was happening. I spoke to somebody earlier in the day. He's lived here in Van Horn for more than 3 decades. And he said he loves it here. He loves it here. He's a rancher. He works with ranchers. He works in agriculture. He said this is by far the most exciting thing that's ever happened. He loves in Van Horn, at least during his lifetime. He described it as a one-horse town to me. He loves it here, but he's so happy that Blue Origin is here.
Well, it's great to have you there and actually just telling us what is actually happening ahead of what I guess some would say is another historic venture into space. Tim, sit tight for a second because I know one of your favorite parts of our show is coming up. Tim Stanovic, he's my co-host here on Bloomberg Business Week and, of course, anchor of Bloomberg Quick Take. You're listening to Bloomberg. All right, little air guitar probably happening there. Tim, you have any idea on what that song is?
I have no idea, but I was hoping it was something related to space. I mean, if I can't hear this when I'm wearing like high definition headphones in the studio, Carol, I'm not gonna be able to get it when I'm just listening in one ear.
Exactly. Dave Wilson, help me out. I know it's a rocker. I just can't. It's not. I know we had Aerosmith Smith last week. Is it Aerosmith again? No. Is it Sammy Hagar? No. Who is it?
You're like completely off base because you're thinking it's a guy. It's
it
Tina Turner.
That's Tina.
Back where it started.
Whoa. Well,
and
Tina,
that's
man.
what's happening.
She's up there with the best.
Yeah, absolutely. I mean, she did a song called The Best.
Yes.
There you go.
Is.
In any case, what we're looking at with today's chart is the relationship between smaller and larger companies. We've kind of gone back where we started if you look at the last few years for the Russell 2000 relative to the S&P 500. And I say that, because, I mean, going into the lows of last year, I mean, you had seen smaller companies really take a hit against larger ones. And, once we got to the lows and the bull market started, I mean, that reversed in a big way, a 44% increase in the ratio between the Russell 2000 and the S&P 500. Peaked in March, and 4 months later, half of that gain is gone. So in other words, the smaller companies are fading in terms of relative strength. The larger companies are back in vogue. So we were kind of back to where we were a couple of years ago, really. And if you want to know what I'm talking about, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave, I'm live in Van Horn. I got to know, what is your stock of the day?
All right, Cytokinetics, Tim. The ticker CYTK. It's a drug developer working on a treatment for heart disease. They came out with second-stage study results, and they say based on what they found, they're moving ahead to the final stage. Cytokinetics has been up as much as 63% today, currently higher by about 40%. That's the stock's biggest gain since the company went public in 2004.
Find Dave's stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. And my co-host Tim Stanovic's going to be back a little bit later on. Dave, you have a good night. All right, let's get to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Senate Majority Leader Chuck Schumer is pushing lawmakers to solidify their bipartisan infrastructure bill and the outline for Democrats' $3.5 trillion legislative package. He's teeing up procedural votes for later this week, first on infrastructure, then later on a budget resolution that would allow Democrats to pass their $3.5 trillion measure in the Senate without Republican support. Well, the defense authorization bill is also up for consideration in the Senate this week.
The Senate Armed Services Committee is taking up the defense authorization bill behind closed doors. Republicans want the Pentagon's budget increased, calling the $715 billion budget request, quote, dead last and dangerous compared to other federal agencies. Senator Kirsten Gillibrand will press for inclusion of her sweeping legislation that would change the way the military prosecutes sexual assault and harassment and other major crimes within the ranks. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, the pressure is growing on the Chinese government after the U.S., the U.K., and their allies formally attributed the recent Microsoft Exchange hack to actors affiliated with the Chinese government. President Biden says they're still looking into the cyber attack.
To the best of my knowledge, and I'm getting a report tomorrow morning on this, a detailed report, my understanding is that the Chinese government, not unlike the Russian government, is not doing this themselves, but are protecting those who are doing it.
Biden also weighed in on inflation, saying it's only temporary. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Joining me once again is our own Charlie Pellet. I'm Carol Massar in our Interactive Broker studio. Charlie, this story also trending high by our Thomas Seal and Nishant Kumar has to do with Bill Ackman, and he is buying a stake in Universal Music Group with his hedge fund rather than his blank check company after opposition from investors and U.S. regulators. And this is where we're starting to see, to some extent, some pushback against the SPAC universe.
Indeed. It's a complicated story, but certainly worth reading. Ackman's special purpose acquisition company, SPAC, is withdrawing its offer for a 10% stake. His hedge fund will assume the share purchase agreement and buy 5 to 10% of the music label. This, according to UMG's owner, Vivendi. The decision comes as the SPAC boom peters out, with the IPOX SPAC index dropping 26% since its February peak.
What's interesting, too, and the reporting done by our team, the complexity of the deal may have been just too much for shareholders of the SPAC. Pershing Square Tontine Holdings, hopefully I'm saying that right. Blank check company's share price has slumped almost 18% since the deal talks were announced back in June 4. So the vehicle had apparently, Charlie, planned to distribute the Universal Musical shares to its investors after a public listing of the music business in Amsterdam later this year. Investors would have also gotten the right to acquire a stake in a new vehicle known as a SPARC, a special purpose acquisition rights company. The deal would have effectively shrunk the size of Ackman's SPAC, allowing it to go after smaller targets. So a lot of moving parts, and maybe it was just too much.
Indeed, but some great artists involved in all of this, too. I mean, Taylor Swift, Drake, Billie Eilish. The deal would have valued the home of those artists at 35 billion euros, roughly $41 billion, including debt.
No, but it's interesting. As there have been more and more people opening up blank check companies and going after different targets, you have seen initially, after just kind of nothing could go wrong and everything was off and running, where investors are really parsing through and maybe making some decisions about this SPAC versus that SPAC. And so, as we saw with that SPAC index, we've definitely saw some pressure in the financial markets. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Brutal day for the bulls. The Dow, the S&P, NASDAQ all slumping today. We are off session lows, but still an 821-point drop for the Dow Jones Industrial Average, down 2.4%. The S&P is down 82, a drop of 1.9%. NASDAQ is down 201, a decline of 1.4%. 10-year yield now 1.18%. Stocks have slumped around the world as investors rush into haven assets after the Delta coronavirus variant cast a pall over the economic recovery. Tension between the U.S. and China escalated. Right now, we have got gold down $1 the ounce, little changed at $18.10. But West Texas Intermediate crude plunging 8%, down $5.74 the barrel, $66.07. So again, recapping steep losses for the U.S. stock market. NASDAQ 100 index down 1.2%. Russell 2000 down 1.8%. Dow Transports down 1.9%. And again, the S&P also lower by 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left until today's closing bell. Charlie, of course, breaking down those major equity averages. We are down across the board, just off our lows of the session, but there is a question out there, is economic growth, has it peaked? So let's get to it with our market close guest. Time for the Drive to the Close. Deepak Puri is Chief Investment Officer of Americas over at Deutsche Bank Wealth, back with us on the phone from New York City. Deepak, good to have you here with us. So what do you see as the reason for equities predominantly being lower today?
Thank you, Carol. Good afternoon. I think today's move is actually, part of it can be explained by the COVID variant Delta, creating some regions in the world to create, short-term lockdowns. I think there is a concern that this reopening is multi-speed, multi-region. So not everywhere you're seeing this reopening trade working. And also the CDC director just yesterday saying that the pandemic is still very much alive in the States for those who are unvaccinated, and which is quite a substantial number of individuals. So I think, to expect that we're out of the pandemic just yet might be a little bit too premature. I think the pandemic is going to have long shadows on policy, on markets, and what today we are seeing is, I think, predominantly related to the concern that the reopening story might take a while to really get going.
So, having said that, are you redoing your market models?
Well, we do our strategic models at the start of the year, which is a long-term view of the markets, and there, given the valuation levels that we have been for the last few months, we did revise lower our equity market returns for the next 10 years. Having said that, the short-term tactical models, we are looking at beyond a lot of these peaks, be it peak in, economic growth. I think rather than just rolling over, I think we have plateaued, and you're going to start to see moderation in the economic growth numbers. Same could be said for, EPS growth number that we're going to see in the second quarter. I think chances are in the second half of the year, you're going to start seeing moderation in peak earnings growth. So peak economic growth, peak earnings growth, most likely behind us. Then you're looking at the policy stimulus, both from fiscal and monetary side. And I think there's good, case to be made that even the big fiscal and monetary impulses may be also behind us. So I think when you take all of these things together, Carol, a good rationale can be made that the markets, we are still above double digits year to date, let's not forget that, might be, taking some pause here.
Right. And it's not like we're falling out of bed, and forgive me. And our Dave Wilson, I thought, gave us some really smart perspective on Bloomberg Radio and Bloomberg TV earlier today and talked about the conviction to the downside or perhaps lack thereof. I mean, big tech, there are gains there. Small cap, which have really taken a beating over the last few weeks, few months. We've definitely seen a pullback there. They're not off as much as the bigger, broader market averages. Gold isn't, we're not seeing gold up a lot. So when you put that together, to me, it feels rather orderly in terms of the pullback and maybe to be expected considering the run-up that we've had.
Absolutely. I mean, I think we need to keep in mind that once a year the markets do correct, right? You do see a 10+% pullback, and 3 or 4 times during the course of the year you're going to see a 5+% retracement, and we haven't had one in quite some time. What we have seen, however, is what I would call rolling corrections, where rather than a broad-based market correction, you've seen certain sectors of the market go through, a pullback or a correction. It started with, last year it was the value cyclical plays, they corrected, and earlier this year it was the tech stocks and some of the other, high-flying names, be it on SPAC, innovation, ESG. So a lot of those things, I think, are still a concern, and hence being selective really makes a lot of sense. And here I would advise that, you could have your base rationale in terms of if you are really sensitive to heightened inflation risk in your portfolio, maybe then you want to be have a little bit more bias towards defensive. If your biggest, positive biases towards the reopening, then maybe it's a good time to start laying into some of these value names that have been clobbered most recently, given this reopening hiccup. Because I do feel that it's not all end for the leisure, entertainment, airlines, and cruise industry stocks. These are going to come back once you start seeing more clarity in terms of where we are with the Delta variant.
So markets may be reacting like they're supposed to, right? This progression, this whole idea, I think it's really smart, this idea of rolling correction, right? The markets are looking at what's happening and reacting, and markets, hopefully, are an indicator of kind of what's to come and kind of foreshadowing. And so we're seeing the evolution as we move through this recovery, which everyone has been reminding us, including all the Fed officials, but market watchers, CEOs, it's not health officials, it's not a straight path forward.
It isn't. And I think the only concern that I have here, Carol, is really what the bond market is saying, which has been the case, right, for quite some time. When you look at a 10-year number, yields at 1.18, I mean, that's really telling me maybe the bond market is going beyond the recovery and really looking at what the terminal rate when the next time Fed starts to hike, which is still years away as per the most recent Fed, dot plots, maybe the terminal rate that we are going to get to for this economy is not going to be even close to what we had in the last cycle, which was 2.5%. So I think that, to me, is a little bit of an area of concern that bondholders, you're really struggling. The financial, repression is up and running, full steam ahead. And also...
Well, let me just ask you, though, do you think the bond market story narrative and the equity market narrative, especially on a day like today, are in sync? They make sense? Or are they at odds with one another? Is the equity market still too optimistic compared to what you're seeing in the bond market, or is the bond market too pessimistic?
I would say it's the latter. I think the bond market is a bit more pessimistic than what even the real, economic data, sentiment indicators, you look at soft and hard data from the economy, what they're suggesting. But that could also be a function of the bond market, especially when you're looking at 10-year, number. It's a little bit further out, right? When you look at stock market, especially the earnings, they are for this quarter and the next quarter. So I think there's a little bit of a difference in terms of the time frame we are talking about. But the bond market has been concerned with regards to, the Fed dot plots. It seems to me that the bond market is just not ready for any talk of tapering either. And maybe that's going to be the real test, in the next few months when the Fed starts to, telegraph at what stage it's going to start implementing this tapering program.
Right.
But I do feel that the bond market is definitely a much more pessimistic view of the reopening story.
Yeah.
And maybe the debt overhang.
Yeah, it certainly, it certainly feels that way. Deepak, thank you so much. Deepak Puri, Chief Investment Officer of Americas over at Deutsche Bank Wealth, with us on the phone in New York City. Just a few minutes left in the trading session, and we are seeing stocks just off their lows, and we're seeing those yields continue to be down a lot on the day. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio and Bloomberg TV and on YouTube, counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Gina Martin-Adams in the house, counting you down to the closing bell, here to take us beyond that bell. With a global simulcast, it is Carol Masser, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to pass through some of the key moments of the day. And we were without Tim, because that's a key area of the day, Carol, because he's down in Texas, hot, as we anticipate that space launch.
Yeah, exactly. We're looking forward to it. We've been getting updates on it. And what's interesting, you look at something like Virgin Galactic, it's doing just fine today, up another 7%. But I think what's interesting, some perspective, Dave Wilson was great on this, in that we haven't seen tech fall out of bed today, the Russell not falling out of bed. So it's not like we're throwing in the towel when it comes to those equity investors, Taylor.
Well, and Gina, really good perspective here. Our 3-day losses on the S&P, only the worst since May. The Dow's only down for 2 days. Now, that is the worst off that we've seen since October. But you're right. I mean, the Russell, you're having a 5-day losses, but that's only the worst 5-day streak that we've had since March. So really so close, those lofty valuations, we're just coming off a little bit from there.
Yeah, and I think that the reality is when you get accustomed to constant gains, any tiny little correction feels absolutely horrific. And we haven't seen a 2% down day in quite some time. But there were a lot of things leading up to this. There were a lot of signs that we were overdue for a correction. It took a really long time to get here, but nonetheless, it can't be particularly shocking considering where we've come from.
Meanwhile, though, they're committed to this sell-off. The volumes are significant. The Dow volume up 47% compared to your usual average, Carol. Up 57% on the S&P 500. Not a single Dow member is in the green.
But I got to say, gold down a little bit, so it's not like all of the safe havens were off and running today, Caroline.
It's all about King Dollar once again. Meanwhile, the S&P 500 down by 70 points as we hear that, closing bell, some sort of energy being tried to struck up as they see the closing bell over at the NASDAQ and the NYSE. S&P 500, as I say, off by 1.6%. That's 68 points lower. As we get settlement, the Dow off by 2.1%, 724 points lower. Every single member of that Dow Jones Industrial Average is in the red. NASDAQ, well, actually, your outperformer, only off by a percentage point, 152 points lower. Let's look at how the Russell 2000 performed as well. The small caps getting beaten up to the tune of 1.5%. That's 32 points lower, Carol.
And you know what did do well? Cathie Wood's ARK Innovation, her flagship ETF. It was up about 0.5%, almost 0.6% here. Again, a reminder that not everything was down today, and especially some of those tech disruptors, the innovative companies that she's identified and been investing in for a long time, guys, they actually did well today.
I would have to take a look at some of the winners and the losers. And for the radio audience, it is a really ugly story when we have the winners and there's only 2. Everything else is in the red. Let me highlight those. It's the semiconductors, NVIDIA, of course, one of the big winners today. And then it is food and staples. It's that defensive trade that's up 0.3%. I'm thinking Kroger, I'm thinking ConAgra, I'm thinking Clorox, right? How much does that really sound like that COVID trade? We were really all going to the grocery store and getting defensive. We come down to some of the worst performers and it does not look good. It's consumer services, it's insurance, it's banks, it's energies. For the radio audience, these are sectors that are off 2.5% to 3.6%. Carol, really as that reflationary reopening trade, it is under some pressure today.
Exactly. Anything to do with hospitality or leisure, airlines, the cruise line companies. Carnival was down 5.7% today. So anything in that world was lower. Zoom, got to mention, a top decliner in the NASDAQ 100, doing that all-stock deal, buying 5.9. It's a call center software company, maybe overpaying. Maybe that's one of the concerns. This is a stock that's been up 20% since about mid-May, but we've also seen some pressure on it too. So watching Zoom down about 2.2%. Peloton, one of the pandemic plays. The Verge reporting that Peloton is entering the video game business, an in-app video game tentatively called Lane Break, and that stock you did see bump up higher, up about 7.2%. Taylor mentioned NVIDIA. I want to mention it was a top gainer in the S&P 500, rebounding off a 4-day decline of more than 11%. This stock has just had quite a run. Check it out. It's, I think, one of the top 10 U.S. public companies in terms of market cap, on par with Apple and J.P. Morgan, and more than Intel and Broadcom, Caroline combined. So it's really become quite a leader in this market.
Has indeed. NVIDIA, your key winner out there. Let's look at what is losing across assets, because this is when your global macro movers tells every story you need to tell. It is a sea of red on the foreign currency vertical. For our radio audience, I'm looking at the Singaporean dollar off by 0.5–10%. The Canadian dollar getting smashed off by more than a percentage point. It's a technical term. We're seeing, of course, it being hit by the fact that you've got a search for safety. The US dollar powers higher. So too does the yen. So too does the Swiss franc. Your havens of choice. That means most currencies on the downside, the 0.7% lower on the Great British Pound. We are worried about the COVID variants over there in particular, and the numbers of people being put into hospital. I therefore go across also as the Canadian dollar gets beaten up, not only because of the US dollar, but because of what's happening in your commodities space. Oil, what a day, the worst day since April for oil. Brent crude off by almost 7%. WTI crude off by more than that, 7.6%. We're trading in a $66 level on Brent crude. This is all as we look towards OPEC plus. Production getting increased there, but also the story of economic concern. What does it mean when you have Delta variants picking up? What does it mean for the global story of economic rebound? We also look at sovereign bonds getting a haven bid across the world, Taylor.
You're certainly seeing that with full faith and credit and the safety trade that is the U.S. Treasury. Take a look at the 5s, 10s, and 30s. You're down 7 and 10 basis points pretty much across the curve. It is a 119 on the 10-year, a 182 on the 30-year. It's Kathy Jones, for example, over at Charles Schwab, saying that they are really trying to fill this gap at a 120, and the next leg down looks a little bit lower, let's say 1%, let's say 96 basis points or so. So you're really getting some concerns, Gina, about some of the technicals that this sounds like. This doesn't really feel like fundamentals, and yet you take a look at some of the factor analysis, and it too does feel a little bit defensive.
It is defensive, and it's been accumulating defensive strategy for some time. If you take a look at what happens in factors over the last week, low volatility factors have outperformed high volatility as a factor by more than 600 basis points. It's an extreme move into defensiveness. So this is an accumulation of events that's been going on for a while. That low volatility move into those defensive shares has spread into momentum and into value, and we're going to continue to see it, I think, spread over time to sort of pick away at more of the market. So this has been an accumulation of events. It's not just a one-day thing. I think this day is certainly a profound day relative to past days, but nonetheless, we really started to see this happen last week, and in the bond market, it's been happening for months.
Well, and this isn't going to be, you know, who's right, the equity markets versus the bond market. Deepak Puri over at Deutsche Bank Wealth was just on it and talks about this rolling correction, you guys, that we continue to see in the equity market specifically. And I guess it has to do with, you know, a big story that we've got on the Bloomberg. Have we peaked when it comes to economic growth in the United States? We've had unbelievable amounts of stimulus that have certainly been propping up and fueling growth. We're coming off of very extreme low levels, Caroline. But then what happens when all of that stimulus goes away? What does growth look like? And is that already factored into the equity markets?
And we get the micro perspective in the earnings that are coming thick and fast as to where that narrative goes. IBM's going to be coming out any minute now. We, of course, look to the likes of Netflix as well tomorrow. Some of the key companies that, of course, do weather the shutdown storm very well. Big technology have been, of course, the haven of choice in many a time. It is interesting, though, that today it wasn't. Even the NASDAQ fell.
And Gina, we go to you on this because we're hearing earlier from David Kostin, Chief U.S. Equity Strategist for Goldman Sachs. He was speaking earlier with Bloomberg about the market sell-off. What companies have benefited the most from the decline? Of course, as it always comes back to bonds. Take a listen.
Those are a lot of the glamour stocks, many of whom are losing money now, but growing their revenues super fast. Now, I think those would be more at risk if rates begin to rise. And so the profitable technology companies is a big area to focus on. So big tech, but the profitable companies. A lot of semiconductors, some of the social media companies, some of the larger tech companies we can think of. Those will be the ones to be focusing on. They've done well. They'll continue to do well in a world of decelerating economic activity.
And Gina, where are we on yields falling? They are good for valuations, but too low, you get really, really worried.
Yeah, at a certain point, you get to the point where Tina reemerges, right? We haven't talked about Tina very often, maybe too much. Nonetheless, Tina sort of fell by the wayside over the last couple of months as stocks were still very expensive relative to bonds. We're at a critical turning point where even a few more basis points rally in the bond market, if the stock market continues to sell off another basis point or two, we'll be back in that fourth quintile of history, meaning stocks are again extremely cheap relative to bonds, and that's proven to be a trigger point for investors in the past.
Gina, that's such an important aspect, right? We always talk about relativity when you're looking at different asset classes, and we have to put it in that perspective because, as you said, investors are worried about returning on returns, Caroline, and so that is an important part of why we see the momentum or lack thereof in the trade.
Tina, there is no alternative. Perhaps there's no alternative but to buy into new companies coming to the market as well. Interesting day for the fact that we had, of course, Robinhood saying it's still committed to its initial public offering. We have filing, of course, as well, Rent the Runway, which is looking at a public offering as well, confidentially. I always love that you say filing confidentially, and then we all report it. But we've also got numbers breaking from the likes of IBM as we speak. Second quarter revenue, $18.75 billion. It's a beat across for the second quarter IBM revenue, better than the $18.26 billion that the market had been anticipating. They're also seeing a second quarter earnings per share at $1.47. That too coming in strong. They say full year adjusted free cash flow will be $11 billion to $12 billion. That is what investors wanted to see. Free cash flow building up and revenue continuing to grow faster than had been anticipated. We're off by 0.6% in after hours trade, Carol.
Yeah, exactly. A little bit lower there, now down about 1.4%. Stock, though, is up about 9.5% so far this year, but will definitely be a story we'll talk about into the Tuesday trade. All right, folks, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. We'll be back tomorrow. Lots of earnings this week. Same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we mentioned IBM crossing with its earnings. Stock now, which was down initially right after the headlines, now up about 1.5%. Second quarter revenue, it's a beat, $18.75 billion versus $18.2, and second quarter operating EPS also a beat by a nickel. We'll get back to that in just a moment. First up, though, a check on world and national news with Nancy Lyons. Hey, Nance.
Hey, Carol. President Joe Biden is hosting Jordan's King Abdullah II at the White House. The two leaders are talking about the conflict in the Middle East and what the White House has characterized as, quote, an opportunity to discuss Jordan's leadership role in promoting peace and stability in the region.
You've always been there, and we will always be there for Jordan.
Biden also thanked Abdullah for his vital leadership in the Middle East, saying it's a tough neighborhood. He is the first Arab head of state to visit President Biden in the White House. Well, the Biden administration is taking a new tack when it comes to media leaks. Bloomberg's Nathan Hager reports.
Attorney General Merrick Garland says Justice Department and FBI investigators will be barred from seizing material from reporters and news outlets except in extreme circumstances. The new policy comes after revelations that the Justice Department seized or tried to seize phone records and other metadata from reporters with the New York Times, Washington Post, and CNN in an effort to root out the source of media leaks during the Trump administration. At least 2 House Democrats, their staff and family members, and then White House counsel Don McGahn were also targeted in the investigation. In Washington, I'm Nathan Hager, Bloomberg Radio.
Habitual coffee intake may give you the jitters, but a new study indicates it can actually reduce abnormal heart flutters known as cardiac arrhythmia. Researchers at the University of California, San Francisco took a look at the coffee consumption of more than 386,000 people over 3 years and found additional intake was associated with a drop in the risk of arrhythmia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Just another reason for me to continue eating my coffee ice cream. All right, Nance, thank you so much. Let's get to IBM because they are out with their earnings after the closing bell. And joining me right now is Charlie Pellet. He's tracking the news as well. Charlie, the stock initially was lower in the after hours. It's now up about 2.5%. I'm thinking it has to do something with that revenue beat. We look for that top line growth, and IBM second quarter revenue, $18.75 billion. The estimate among analysts tracking the quarter, $18.26 billion. So that's a beat. And then if you look at the operating EPS, the bottom line, $2.33, excuse me, versus $2.28. So that's a nickel beat.
Indeed. Look at market reaction after hours, up now by about 2.8%. Just saw it spike higher right there. IBM advancing after reporting its biggest increase in revenue in 3 years on the back of strong cloud computing demand, beating analyst estimates and signaling that CEO Arvind Krishna's pivot to the fast-growing market is starting to pay off. He took over as CEO at the height of the pandemic. His strategy does appear to be working. He is steering Big Blue into cloud and artificial intelligence in an effort to modernize the company. And should mention now the shares are pushing higher. They're up now by about 3.2%.
It's been about the cloud. Microsoft, Google, right? Amazon, cloud services. And to be fair, IBM late to the game on this. They did make an acquisition. They bought Red Hat for $33 billion in 2019. That was the first step in a shift to what the company calls hybrid cloud, which allows companies to use a combination of their own data centers and computing resources leased from others and accessed online. So it's a combination of stuff right on, on your location versus also stuff in the cloud. But that is a big deal for that company that's been working towards it. Again, Charlie, looking at that stock, we're going to be following it into the Tuesday trade. It's up 3.6%.
Indeed. And just one brief mention here, the Global Technology Services Unit, that's a large portion of which is on track to be spun off by year's end, showed almost no gains in revenue.
All right, tracking this company again, up 3.3% here. As I mentioned, it's up just shy of about 10% so far in 2021. Charlie Pellet, thank you so much for walking through IBM. You're listening to Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Right now, IBM shares up by 3.7%. IBM reported its biggest increase in revenue in 3 years on the back of strong cloud computing demand, beating analyst estimates and signaling CEO Arvind Krishna's pivot to the fast-growing market is starting to pay off. Again, shares of IBM after hours right now, they are up by just about 4%. Stocks declined today. Ugly day for the bulls. Stocks slumped amid virus jitters. Stocks down around the world as investors rushed into haven assets after the Delta variant cast a pall over the economic recovery. S&P down 68, a drop of 1.6%. The Dow down 725 points, down 2.1%. 30 out of 30 Dow stocks lower today. At one point, the Dow had been down 946 points. Again, ended the day with a drop of 725. NASDAQ down 152, down 1.1%. 10-year yield 1.19%. Gold little changed, $18.11 the ounce. West Texas Intermediate crude plunged 7.6%, $66.34 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Tapping and reaching consumers, well, we know it changed a lot during the pandemic. So too are heightened privacy concerns. It continues to do so. We heard about that a lot from Mack Weldon CEO Brian Berger when he joined us last week on air. One company in the middle of all of this is Obsess. It's an e-commerce interface. It's used by brands and retailers to create a 3D 360 shopping experience online, on mobile, and more. And they've worked with the likes of Levi's, Samsung, Coach, and more. So here with what they are doing and seeing and what it tells us about consumers and commerce is Obsess founder and CEO Neha Singh with us on the phone in New York City. How are you?
I'm good, Carol. How are you?
I'm doing well, we continue to track what's going on in the consumer, the impact of the pandemic. First of all, what was your last year like?
So our last year was very busy. We grew very rapidly. What happened really last year was that there was a swift transition to e-commerce across, every age demographic. Retailers and brands had to adapt quickly and find a way to recreate the in-store experience online to keep their customers engaged. So what Obsess did is we really allowed brands to meet this demand by creating immersive, shoppable, virtual store experiences that let customers have some of that feeling of being in a store without actually being in the store.
So what did that mean? So what did that mean for me, the shopper, who felt like a lot of online was still the way it was pre-pandemic? What are you talking about specifically? What changed?
Yeah, so for the brands that we work with, they have basically created virtual stores on their websites. And virtual stores are these 3D immersive experiences. They can appear in a couple of different ways. Either they're actual retail stores that you can now visit on the website. So instead of going to the retail store, you can pretty much get the entire retail store experience online. You can go around the store, browse it, shop the products. Or brands can create virtual stores that are completely digitally rendered, which means essentially that they can create any type of an environment, any type of a store. Many of our brands created like houses, for example, and you could go around the house and shop products. So it's much more engaging format for online shopping.
So how did it change? I can understand how it might impact the consumer experience, but how did it actually move the sale of goods? What were the direct correlations between doing something like this where somebody could go into a store, have a 3D experience virtually, and then as a result, do a lot of shopping?
Yeah, absolutely. So the purpose of these experiences is to give customers a much more immersive, branded environment to shop online. And what it results in is higher engagement from customers, which means they spend more time. They're clicking through on a lot of products. It drives discovery of products because the traditional e-commerce interface is very, search and filter driven. It's mostly a grid of thumbnails on a white background. And so with this, customers are discovering more products, which is driving both the conversion rate, which is basically the rate to purchase, as well as the the average order value, which is the cart size. So like just the number of products people are putting in the cart.
Yeah, it's pretty interesting. I mean, how do you guys go about it when you're designing and working with a retailer? Is it just recreating an existing store, or it's a very, very different approach?
Yeah, that's a great question. It's actually both. So sometimes with some brands, we recreate their existing physical stores if that kind of meets their criteria for what they would want in a digital experience. And with some brands, we create completely digital environments, which can either look like a retail store, but maybe not like their real life retail store. It can be much bigger, for example, but they can also be completely fantastical environments as well.
Is it like, I am obsessed with real estate, and so I love looking at homes, and I love when there is a virtual platform that I can play with and I can walk around the floors and see something. Is it very similar to something like that?
Yeah, exactly. So it is the same interface that you use for virtual tours of homes, but now it's kind of like doing that for stores and being able to actually add products to your cart while you're doing that in shop.
So I have to ask you, because you are obviously a company that's reliant on your software engineers, right, and your tech talent. What's it like? What's the battle for those type of talent right now?
Yeah, the battle is very aggressive.
I bet.
It's definitely very much in demand. That's my background as well, software engineering. So, yeah, it is tough. So I would encourage more people to learn coding.
Well, and are there bidding wars for talent? I mean, are you having to, we talk about wage inflation in this environment where a lot of companies are competing for similar workers, but it does feel like, I have an 18-year-old. I'm like, go study software engineering because I feel like it doesn't matter what company you are, you're going to need software engineers, tech engineers, the whole IT thing.
Yeah, absolutely. Definitely. I think the rates, have just gone up a lot in the last 2 years because of the demand. So, as startups, it's definitely difficult to also compete with the larger companies like Google, where I used to work before. So it's an ongoing challenge.
Well, great to check in with you, and hopefully you will come back and we'll hear more about your work that you're doing with retailers. Neha Singh, she is the founder and CEO of Obsess, and joining us on the phone in New York City. Just a reminder of how we closed on this Monday, because we did see some selling, and it certainly was a risk-off day, but not completely for all sectors and all asset classes. Dow Jones Industrial Average down 2 points, down 725 points. The S&P 500 decline of 68, which worked out to a 1.6% decline. NASDAQ, the better performer of those major equity averages, still down 1% or 152 points, but certainly doing better than the Dow and the S&P. You're listening to Bloomberg Business Week. We're talking space and the space race in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we've been focused on the overall market trade, understandably so. Haven't seen this kind of a pullback, but again, rather orderly. And as we said, it wasn't all asset classes. We're also focused, though, on that space race. And we're seeing another billionaire head up into space tomorrow. We're talking about Jeff Bezos. We're going to check in once again with my co-host, Tim Stenovic, down there on the ground in Van Horn, Texas. In the meantime, some news after the closing bell, including IBM earnings, Charlie Pellet.
Indeed, lots going on. Just want to mention that shares of space, Virgin Galactic Holdings, off like a rocket today on a down day for the rest of the market. Shares surging 7.3%. We'll hear more from Tim coming up in just a moment. The Dow, the S&P, NASDAQ, steep losses today. You mentioned IBM. Let's begin there. Shares up by more than 4% after hours. IBM reporting its biggest increase in revenue in 3 years, thanks to strong cloud computing demand. It did beat analyst estimates. It also signaled that CEO Arvind Krishna's pivot to the fast-growing market is starting to pay off again. Shares of IBM up now by just about 4%. Stocks slumped around the world as investors rushed into haven assets after the Delta coronavirus variant cast a pall over the economic recovery. Tension between the U.S. and China escalated. As for what was going on in the market and his take, Deepak Puri is Chief Investment Officer for Americas at Deutsche Bank Wealth Management. He was our guest on Bloomberg Business Week.
So I think, to expect that we're out of the pandemic just yet might be a little bit too premature. I think the pandemic is going to have long shadows on policy, on markets, and what today we are seeing is, I think, predominantly related to the concern that the reopening story might take a while to really get going.
And again, Deepak Puri with Deutsche Bank Wealth Management, worst level for the U.S. stock market, worst decline since the middle of May for the S&P 500 index. Today, the S&P down 68, a drop of 1.6%. Dow Industrials down 725, down 2.1%. Worst level, the Dow had been down 946. NASDAQ down 152, down 1.1%. NASDAQ 100 index down 0.9%. 10-year yield right now 1.19%. Gold little changed, $18.12 the ounce. West Texas Intermediate crude plunged 7.4%, $66.50 a barrel. Zoom Video Communications, whose online conferencing services took off during the pandemic, is acquiring Five9 for $14.7 billion, using its surging stock to expand into an adjacent market that could bolster revenue as lockdowns end. Zoom shares are lower today by 2.1%. Shares of Five9 today did advance by 5.9%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So isolated thunderstorms early, then partly cloudy after midnight, winds northeast at 10 to 20 miles per hour, chance of rain 50%. Where am I talking about? I'm talking about Van Horn, Texas, which leads me to my co-host Tim Stenovic, of course, of Quick Take. He is there on the ground. You had to move. What happened? Did the skies open up there or what?
Yeah, well, the skies appeared like they were going to be opening up, Carol. We also saw on the radar that we could be getting some rain soon, and indeed, since we've got here, we've seen some rain behind us, but we're in a different spot. We're covered, and things are good, but it speaks to how quickly weather moves here and the challenge that Blue Origin is going to have tomorrow to have that perfect window of luck and weather right at 9 a.m. Eastern time when they're set to launch New Shepard.
Listen, you know this better than us, and we've all, when we're tracking some of these, whether it's Elon, whether it's Jeff, when they're looking to go up into space, there's a lot of times things are scheduled and then we have postponement. I'm looking at Tuesday for Van Horn, Texas. It says mostly sunny, winds of about 17 miles an hour. So I guess everybody's hopeful at this point.
Yeah, I think you're probably a lot of fingers and toes crossed right now with the Blue Origin crew, thinking about, what's going to happen in terms of weather tomorrow. But if there is a hold because of weather, what they do is they have a window. They could delay it for a few minutes, for a few hours, or ultimately push it to another day. They could push it to the next day. So we'll have to keep an eye on that. And what do they say? Something you can't control? The weather.
Yeah, exactly right. So what's the difference, again, too, and I wonder how weather is a factor. Is it more of a factor because we're talking about a rocket going up, right, versus what we saw with Richard Branson, which took off of a plane?
Yeah, so a couple things here, Carol. One is that Blue Origin's process is entirely automated. I mean, think about this from the perspective of what we saw with Virgin Galactic. There were pilots required to carry the dual fuselage plane to 45,000, 50,000 feet, and then drop that plane, and 2 pilots required to then push that plane above 50 miles above the Earth's surface. The Blue Origin experience is completely automated. So it doesn't matter, as Blue Origin has said, if there's anyone on the spaceship, or I should say on the rocket or in the capsule, or if there's not anyone there, if there's just research payload. The experience is completely the same. So it's completely automated right there. So that's one difference. The company also has said that they're shooting for being able to launch in 95% of weather conditions.
That's pretty significant. Hey, in terms of who is on board, and this has been a big part of the story, of course, we talk about the billionaires, Richard Branson, of course, when it came to Virgin Galactic, Jeff Bezos when it comes to Blue Origin, but there's some other pretty notable folks on his flight.
Yeah, there are. So we're going to see tomorrow, if all goes according to plan, the oldest person in space and the youngest person in space. We'll start with the oldest person in space. Wally Funk, she is 82 years old. She's an aviator. She's flown over 19,000 hours. She's taught thousands of people how to fly, and she was part of a program during the Mercury time when it came to NASA. This was a private program that was privately funded, and it was to train women to become astronauts and to really expose them to the same things that Alan Shepard and the Mercury crew were going through. And she ended up flying past expectations, exceeding expectations, and in fact doing a better job than many of her male counterparts. The program, though, was ultimately canceled, and she was never able to go into space. So tomorrow she will be going into space for the first time. It's fair to say that she is probably the person on that spacecraft that is the most prepared for that. And then there's also Oliver Damon, 18-year-old from the Netherlands. And he's going to be the youngest person who's ever been to space. A Russian in his mid-20s was able to do that years ago, and until tomorrow, he will have been the youngest person in space. So a couple of records being broken tomorrow.
I love that part of the story. How much studying up have you done over the weekend? Talking with your uncle ahead of this?
Yeah, a lot. Yeah, a lot of time on the phone, a lot of time reading everything, and of course making sure that everything's going according to plan. Also, take a long time to get here, Carol. There were a lot of flight cancellations because of the weather on Saturday. You know, Ed Ludlow had a really tough time getting here as well. His flight was canceled and then rerouted. He ended up driving ultimately from El Paso, but he was all ready to drive from Albuquerque through the night so he wouldn't miss it.
So you're basically saying it's going to be probably easier for Jeff Bezos to get out into space than it is for you guys to actually get to Van Horn.
That's what I hadn't thought about that, but it might actually be easier for Bezos to get into space than it is for us to get to Van Horn. That is a very good point.
All right. Well, listen, have fun tonight. Looking forward to your coverage tomorrow here on Bloomberg Radio and Bloomberg TV. Of course, my co-host, Tim Stanovic of Bloomberg Quick Take, there in Van Horn, Texas. And we will have live coverage of that takeoff of Jeff Bezos and his Blue Origin crew. You're listening to Bloomberg Business Week. I'm Carol Masser. We do want to get another check on world and national news. For that, we turn things over to Nancy Lyons in our 991 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. The nation's top infectious disease expert, Anthony Fauci, says the Delta variant of the coronavirus is causing a significant increase in infections, and the Biden administration is practically pleading with people to get vaccinated. He tells Bloomberg the risk of infection is minimal for those who've already received a shot.
Vaccinated people are generally protected from infection. Not completely, because remember, the vaccine trials that showed the efficacy of the vaccines were based on the ability to prevent clinically apparent disease.
Fauci says if you have received the shot, you're unlikely to be hospitalized or to die from COVID-19. The administration today is warning Americans to avoid travel to the UK if possible because of a surge in that nation's spread of COVID-19. Pandemic restrictions have been lifted there, even though cases are rising, but many workers are still staying at home. We spoke with London Mayor Sadiq Khan about that situation.
What you're not going to see is people returning 5 days a week to the offices or place of work. What I suspect you will see is those who've not been in their office for maybe 16 months coming back, first for a day, then 2 days, and building confidence over the course of the next few weeks and months.
London Mayor Sadiq Khan says many employers will continue to limit the number of staff in the office. More than 80 large wildfires are burning across the West, aggravated by the worst drought this century. Axios is reporting this week FEMA Administrator Deanne Criswell is expected to make her first trip to the states most impacted by the fires, Idaho, Oregon, and California. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
Thank you so much, Nancy Lyons in our D.C. Bureau. Joining me once again, Charlie Pellet right here in our New York Bureau. And Charlie, these are our two most read stories on the Bloomberg as we speak. One has to do with the market sell-off today. Our Vildana Hyrick and Claire Ballantyne putting together a story and says a lot of very young people are going to be buying the dip in stocks that we saw today. Every dip has been bought and immediately paid off. This is according to one of the individuals that they talked to, Randy Frederick, Managing Director of Trading and Derivatives for Charles Schwab. ETFs, by the way, on pace for a record year with $486 billion being added so far in 2021.
Indeed, Carol. It was an interesting day because of the worst level. We had the Dow down 946 points, a drop of 2.7%. The S&P had been down in 94, drop there of 2.2%. You run the HCPI function on the Bloomberg, and it will tell you just how much we fell at the worst level of the day. The S&P, though, ended the day with a drop of 1.6%. You pull up a chart, and you can see that stocks seem to gain momentum, moving off session lows into the close. And again, the headline on the Bloomberg here, a lot of very young people going to be buying the dip in stocks.
It says someday the post-pandemic equities rally is going to end. When it does, it will take a lot of newly christened stock bulls with it. And the point is, their refusal to bend has been the signature fact of the stock market for at least 12 months, putting a floor under 4 other sell-offs in 2021 alone this year that look just like the one that has sheared almost 3% off the S&P 500 index. So, the point is these retail investors, the question is whether the devotion of retail investors is enough to turn the tide again is really the biggest question in markets right now. But I keep reminding everybody, I'm calling it the massive sell-off, but every time in August I've gone away, we do see some kind of correction in the equity markets. I mean, we've had a pretty bullish run up to this point off of the lows of last year and certainly even this year, Charlie. And you do wonder whether or not at some point it would be logical to expect some of the froth being taken out of some of the moves.
Indeed. So far this year, by the way, the S&P does remain higher by 13.3%.
Still, even after the pullback today. All right, Charlie, thank you so much. That is, again, one of our most read stories, the most read on the Bloomberg.
breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of after-the-bell earnings. Steel Dynamics reporting second quarter earnings of $3.32 a share. Net sales $4.47 billion. Estimates on Steel Dynamics of $4.21 billion. Again, second quarter EPS $3.32. Estimates, by the way, $3.36. I'm keeping an eye on shares of IBM after hours. Shares are moving higher. They're up now by about 2.9%. Cloud demand lifted sales at IBM to its best quarter in 3 years. Down day on Wall Street, that is putting it mildly. Steep losses for stocks today. Tough day for the bulls. Stocks slumped. Virus jitters fueled a rush into bonds. 10-year yield 1.19% to be clear. 1.19% on the 10-year. 10-year up 28 seconds today. The S&P down 68, lower by 1.6%. The Dow Jones Industrial Average down 725, well off session lows, down 2.1%, have been down 950. NASDAQ down 152, drop there of 1.1%. Gold at $18.12 the ounce. West Texas Intermediate crude plunged 7.4% today, 66.57 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Right, gold a little bit lower today, which is interesting considering some of the pullback we saw in equities. All right, Charlie, thank you so much. So a story on the Bloomberg today as well about U.S. Treasury Secretary Janet Yellen expressing doubts about last year's trade deal with China, the first clear statement from the Biden administration detailing its thinking about the future of the agreement between the world's two largest economies. That was something we talked about with Andy Brown at Bloomberg New Economy earlier. That's on his radar as well. The relationship between the two continues to be complicated, yet inextricably linked. Someone with a keen perspective on all of this, and back with us is Chris Fenton, trustee of the U.S. Asia Institute, author of Feeding the Dragon Inside the $1 Trillion Dilemma Facing Hollywood, the NBA, and American Business. That book out last year. He joins us on the phone in New York City. Hey, Chris, good to have you back with us. How are you?
Carol, always a pleasure and always a lot to talk about when it comes to China.
Yeah, WOA is right. We talked about a bunch with our Andy Brown of Bloomberg New Economy, who, lived in Asia, China specifically, understands that market. You do as well. First of all, Janet Yellen coming out, making some comments. We also had regulators, specifically here in the U.S. and elsewhere, pointing to China when it comes specifically to that Microsoft Exchange hack that happened, and saying that they were actors affiliated with the Chinese government, accusing the Chinese government of a broad array of, quote, malicious cyber activities. How would you assess the U.S.-China relationship? Here we are on Monday, July 19th, 2021. It's a relationship that's been fraught with strain before. How does it look to you right now?
Well, it's amazing. I mean, I remember being on with you and Jason back in October 2019, and that same question was asked right after the Daryl Morey tweet that shocked sort of the NBA and China relationship. And we were in the middle of the Hong Kong protests at that time. And you cut to today, almost 2 years later, and I would say this relationship has only gotten more amplified as far as its tense relations, and it seems to only be getting worse. I mean, there are signs of some green shoots out there, but they're very few and far between. For the most part, we're seeing things getting even more and more tense and more difficult.
Well, you mentioned Daryl Morey. I mean, the NBA front office guru, right, back in 2019, and basically he came out and expressed support for Hong Kong's pro-democracy protests. And then you had LeBron James come out and remind us what he did.
Yeah, it's unbelievable. And we talked about it back then 2 years ago. And here we are today. We have Space Jam 2 that came out in United States theaters and in markets around the world. Yet China has not allowed it access to that market. And quite frankly, that movie was made for the Chinese market. Both the NBA, LeBron James, and Hollywood really set its sight on that market being the largest in the world. And to date, we do not have a release date for it.
Right. And this is LeBron James. He's been involved in this movie big time, obviously starring in it, but also in terms of the production of it.
Yeah, no, and exactly. And he was one of the biggest critics towards the free speech rights of Daryl Morey. And there was a lot of reasons for him to do that because he had a lot of skin in the game when it comes to the China market. It's very difficult for people that don't to say, hey, why are you speaking up against what Daryl Morey was doing? But the fact is he's making $50 million a year roughly in that market from those consumers, and he needs to tread carefully. But the fact is he has been treading carefully for the last 2 years, and we're seeing sort of the lack of reward for that kowtowing happening today with his movie not in theaters.
It's always been delicate for any of us who've been following increasingly U.S. companies, global nationals, global multinationals overall, but U.S. companies, cozy up to China specifically over the last couple of decades because they wanted a piece of that 1 billion plus consumer market and doing whatever they needed to kind of get themselves on the ground. Do you think that changes dramatically going forward because of the heightened tensions? We've been in a heightened tension situation before between U.S. and China.
Look, I've been very vocal about it because I am hopeful. I have 2 kids that are 14 years old, and I want them growing up in a more balanced global community. So I'm talking about it. But I also want to be constructive. I refuse to speak out against C-suite executives telling them that they're doing the wrong things. It involves all of us. I mean, you have investors and shareholders that are putting massive pressure on these C-suites to essentially kowtow to the Chinese Communist Party and do exactly as they say. And on top of it, you can't just have one celebrity or one athlete like LeBron James take a stand. They'll just be a lone wolf or a sacrificial lamb and replaced by somebody else. So this is a united we stand situation. We need to create the leverage as a nation, as a Western alliance, to push back against the Chinese Communist Party, and we can. And we've seen it before. They do retreat if you apply the right kind of pressure. But right now, we have not done that. It's all been lone wolf approaches, and that's just not going to get us anywhere.
So be real. You were president of DMG Entertainment Motion Picture Group, general manager, of DMG North America. So listen, you were working in China specifically when it came to, movies and all of that, creative content and businesses. So I do wonder, do you expect it to change dramatically?
Look, what I expect to change is more and more people like myself who are cogs in the wheel that believed in the mission of globalism being in the best interest of the the average American citizen and our Western allies. But the fact is, we've done it too far. We've done it in a way that is detrimental to the long-term health of the Western alliance, and we need to wake up to that. And there's lots of us that are, and it's time that we start to put pressure on leadership, on businesses, and get consumers excited about the fact that, hey, you know what, these companies, if they take an activist position against some of the things that are wrong in that market, they'll be rewarded with the pocketbooks of people in countries around the world that will generate more revenues for those products and services. We just need to have the guts, and we need to start uniting together, because just one shot, one single entity is trying to approach this is just never going to get us anywhere. But the bottom line is, I am hopeful.
You're hopeful, okay. But I mean, I guess I want to say, what's the likelihood? Just got about 30 seconds left here. I mean, hope is a great thing, and I'm an optimist, and I'm with you, but I do wonder, what's the likelihood?
The likelihood is getting better because I'm seeing a bipartisan move towards it. We are seeing both left and right unify in Congress to push forward bills that might do it. So I am feeling like we do have a likelihood, but it's going to take a lot of work.
Yeah, that's a good point. Hey, listen, good to check in with you. Be well. Chris Fenton, trustee of U.S. Asia Institute, on the phone in New York City. Joining us right now from the nation's capital is our own Joe Matthew. What do you got coming up?
Well, we're talking cyber attacks and China. Can you believe it wasn't Russia? China's the first one we hear about. And we'll have Bloomberg Deputy Managing Editor for U.S. Government News, Wendy Benjaminson, also someone who works in this business, Jamil Jaffer, cybersecurity company called Iron Net Security. Yeah. See how sophisticated these guys really are.
Just another layer of the complicated relationship that is U.S. and China. All right, Joe Matthew, looking forward to that. Sound On coming up with Joe Matthew in just a few minutes right here on Bloomberg Radio. For the whole Bloomberg Business Week team, have a good and safe evening. I'm Carol Massar.